If I had to start over right now with $0 and I wanted to make $250 a day, here's exactly how I would do it. Anyone can start trading foreign exchange, futures, or even regular stocks by trading fractional shares with a small amount of money and a small amount of risk. You just have to know how to do it. It really would only take you 60 to 90 minutes, so about an hour to an hour and a half each day, and you can work this around your work schedule. So if you do have a 9 to 5 or you have a full-time job where you're working 40 to 60, 70 hours a week, just carve out a time that you can get about an hour's worth of work done. And I know what you're thinking, I don't have the time for that. I have kids, or maybe I want to go to the gym, or anything else that you have as an excuse to not do this. Think about this, nothing in life worth doing comes easy. So if you can carve out an hour to an hour and a half a day, you can make it as a profitable trader, and I'm going to show you how. The core goal of this video is to focus on consistency. Consistency over time. Small profits, building them bigger and bigger and bigger until you have a substantial account where you can start withdrawing monthly or weekly to replace or subsidize your current salary. That's the goal of what we're looking at here. So if I were to start over, I would choose the foreign exchange markets. The foreign exchange markets meaning you're trading currencies, meaning the Japanese yen, the Great British pound, the euro, the dollar. All of these currencies you can trade against each other, meaning if you are taking a buy on USD/JPY, that means you're buying or betting on, which is lack of a better word, is the chance that the dollar goes higher than where the Japanese yen is. So you're trading currency pairs when it comes to trading quote unquote Forex. So you're probably thinking, well, why would I trade currencies when I can trade the stock market? Well, there's a couple reasons. One, the foreign exchange market is open much longer. There's more hours in the day that you can trade. You have the London session, the Asian session, and you have the New York session. But that's just the tip of the iceberg. You can also trade with a lot higher leverage. I personally use a broker called Henko Trade, and you can use whatever broker you want, but they allow me to trade at 1 to 500 leverage. So what that means is that if I only have $100 or $200 to start with, which is where I see most of my students coming in saying they only have a little bit of money to start, but they really want to make money, this is where the leverage factor comes in, and you're able to actually grow an account without just making $1 to $2 a day, because that is brutally honest not going to happen for most people. You're not going to be able to be profitable only making $1 to $2 a day. So that's where leverage comes in. The flexibility of being able to trade is also a huge plus. So we talked about the amount of time that the markets are open, but we haven't talked about really position sizing, where if you're going to buy a stock of, let's say, Tesla, like Tesla's going to run you a couple $100. If you're going to buy SpaceX, it's going to run you a couple $100 or $190, whatever it's at right now. Whereas you can buy micro lots, mini lots, and full size lots. A lot is just another term for position of the currency that you plan on trading against. So the flexibility of having not only leverage, but being able to buy smaller portions of the quote unquote stock or currency is where the beginner traders or traders that don't have a lot of capital can really thrive in this market. So to dive into actually how to trade, you need to stop chasing moves. So a lot of beginners, when they start trading, they chase these big moves and then they're upset when they miss them. That is the beginner's fault there. They need to wait until the specific plan is set. And that's when we talk about finding a system that works for you. When you first open your charts, you're going to wonder, how do I buy? How do I sell? Where do I get in? The longevity in trading and the ability to become profitable comes with actually waiting for the market to come to you. So instead of chasing these big moves or looking for the next big thing to try and hit, you develop a system and wait for the markets to show that that system's available to take either the buy or the sell. Now, I know that's hard for a lot of people, but this is why there's a very small amount of population, and this is just me being honest, can actually trade full-time and withdraw profits consistently. Now, the major edge, the edge that everyone thinks is fake or you may believe in, but you don't know how to get there, the edge is real. And the edge comes from the mechanical system that you've created or you've learned that enables you to technically analyze charts. And I know that sounds like just a lot of big words and a lot of words that people may not understand. But at the end of the day, if you are able to learn a system and control those emotions and wait for the market to come to you, you're going to be able to become a profitable trader. Now, this isn't for everybody, like I said, so let me show you how. So the first step when you open up TradingView and how you look at a chart is going to be to find your support and your resistance zones. So support and resistance is very important. This simply means the top of the chart, the highs, and the bottom of the chart, the lows. So let's find that here. So as you can see on the chart, we have the lowest point, which is right down here. We can call that the support. And we have the highest point, which is right up here. We can call it the resistance. Now, I drew this out, but typically you're going to want to use the actual square tool, which is right here, the rectangle tool, and actually draw it out for yourself so it's a little bit cleaner looking, but the top is right up here. So now that we have those intact on the 15-minute time frame, which is very important to point out, we did this on the 15-minute time frame, we can zoom in and look for some sort of analysis that aligns with our system. Now, our system is going to be a break and retest after a break of structure, and I'll explain what that means. Now that we've identified our support and resistance on the 15-minute time frame, we're going to zoom into a smaller time frame. Now, the candlesticks are what the time frame you're on, so each of these candlesticks is 15 minutes. We're going to move into the 5-minute chart. Now, on the 5-minute chart, you clearly have the top and the bottom, but we have a point here where we had a break of structure where our resistance and our support have changed. So here you have what was an original support right here and is now a resistance right over here. In the middle, what we have right here is called a break of structure. Now, a break of structure is very simple. It is when you have a localized support that is broken and it now becomes a localized resistance where it is rejecting and coming back down, like you can see over here. Now that we've established that we have the break of structure on this chart right here, we're going to look for our key rules. We have 5 key rules that we're going to go over here. So, rule number 1, we need to identify that this is in fact a downtrend. We know that because we have lower highs and we have lower lows. So this is in fact a downtrend. That is going to be rule number 1. Rule number 2 is going to be identifying a break of structure. Right here, rule number 2, we had the break of structure where we came through the previous support and now created a new resistance. That's rule number 2. Now, rule number 3 is going to be compromised by using a fair value gap and an EMA ribbon. Now, your EMA ribbon is going to have a break of structure on it. So we have a full candle closure below the EMA ribbon. That is going to be rule number 4. So again, rule number 4, we need a full candle closure below the EMA ribbon. Now that we have that, we can move on to rule number 5. Rule number 5 is that we need a fair value gap formed. We had a red fair value gap formed right here, and it retested on the break of structure. So we had the break of structure here. We went down, we retested up. We've now rejected this area, proving that it is indeed our new resistance. And we can look to take sells because we had the full candle closure below the EMA ribbon, as well as the fair value gap right here. Now let's use a real life example here. We have Euro JPY, and we're going to go through all of the steps that we just went through to be able to take a trade. So we have our bottom down here, our support. We have our resistance up here. This is on the 1-minute time frame now. So we found our break of structure right here. We broke down below the EMA ribbon. We have now retested the EMA ribbon. So we have not only a confirmed downtrend, a reversal at a key zone, a break of structure, a full candle closure below. We are now looking to take sells. So if we were to do that, we wait for this to retest right here, not a problem. So we're going to go ahead and short this right here. Our stop loss is going to be right above the resistance, so right up here, and our take profit's going to be down here near our low, which is our support. Now we can wait for this to play out. As you can see now, this trade played out absolutely perfectly using the 5-step system. And if you were to look at how much money we made, you are at about 10 pips. Now it is going to keep moving down because we did this on the 1-minute time frame. You could actually hold this a little longer and look toward a further bottom. Again, this is a live market right now. If you wanted to, you could hold this toward this secondary support right here. However, we got in and out very quickly for 10 pips, but as you can see, another fair value gap was just created right here, letting us know that this may actually continue further down with using our very tight stop loss and waiting for this to come down. The next part that I want to mention is also very important because we're talking about risk to reward ratio and protecting our capital. We are not risking a lot on this trade. This is actually a 1-to-3 trade if we went all the way to the bottom, where we took profit was a 1-to-2 trade. All the way at the bottom here is actually going to come out to a 1-to-9 trade. Typically, that's not the ratio that I look for. I'm looking for anywhere from 1-to-2 to 1-to-7, 1-to-6. But specifically on this live trade right now, it is continuing moving down, and this would be a 1-to-9 trade with a very, very tight stop loss, ensuring that we are protecting our capital and making sure we're not over leveraging or holding too much drawdown. Now that you've learned the system, you want to implement it into real life and you want to start to practice it so you can understand what we're doing and actually how to do it. So going back to what we talked about in the beginning, you need to pick 60 to 90 minutes to look at the charts each day and find this system over and over and over again. I want you to be able to identify it. And the way we're going to identify it is looking at the 15-minute, the 5-minute, and the 1-minute. This is going to help you do this in a quicker time frame, whereas if you were to look at it on a 4-hour or a day chart or a 1-hour chart, because you have a small amount of time to get it done that you're carving out in your day, this is going to help you do it in a smaller amount of time. I want to make it very clear that when you do decide to follow this system, you need to be precise about it. If the 5 rules are not met, you do not take the trade. Bottom line, we take the A+ setup every single time. That's replicating the system in order to help yourself become profitable. Replicating that A+ system over and over and over again. And in order to do that, you can practice this on TradingView in that 60 to 90 minutes that you've carved out for yourself over and over and over again before you start risking your actual capital and your hard-earned money. Now that you've learned how to chart and you're planning on doing this over and over again each day to practice, you can start this for free. There's a lot of systems that require money as a startup fee. However, TradingView and Hanko Trade, which is my broker, allow you to open a demo account or what's called paper trading. Paper trading is essentially giving you fake money to start out trading with. So you can start out with what you're willing to put in, meaning what you'd be trading with a real account, or start with a large amount of money so you can make, have those mistakes and really learn from them and understand, wow, okay, I just lost $5,000 of fake money, obviously, but you'll know what to do and what not to do. Again, TradingView has it available readily. Once you click buy here, you can open up a paper account with any of these brokers or just straight into TradingView, or you can personally use my favorite, which is Hanko Trade, and the link for that will be in my bio. Once you've developed the confidence and your paper trading account has grown week after week or month over month or even day over day, once you get that confidence and you feel that you've learned the system and you understand price action and market structure a little bit in accordance to the way I've explained it here, it may be time to move to a live account. But take as long as you need on paper trading, and don't let these people on the internet fool you into thinking you need to deposit real money right away, because the truth of the matter is it does take time to learn how to day trade. Here are a couple hidden traps that I want to go over before you start to day trade, because I know there's a lot of misinformation out there in the markets and on the internet. Number 1, ditch prop firms as soon as you can. Prop firms essentially allow you to buy a challenge for a small fee like $50 to $100, and they tell you you're trading with a $100,000 account, but you can only have $2,000 drawdown. Essentially what they're doing is challenging you to see if you can make money using fake money before they fund you to use real money. The downside to this is challenge fees can get expensive over time. You have to use very strict rules that they put on you rather than the system that we've just talked about. And number 3, you do risk not getting payouts with these prop firms. The amount of money that you've spent on challenges trying to pass them over and over again to prove to yourself rather than just paper trading on your own can get expensive and costly. Now, I want to be very clear, when you move from paper trading and have the confidence to go over to a live account, start with a small amount of money or money you can afford. Do not use money that is not discretionary income. You do not want to trade with emotions and using money that you cannot afford to lose, because losses are going to happen inevitably. Every trader loses money, but losing money that you cannot afford to lose will only lead to emotional ties to the trades and emotional ties to the charts, which leads to fear of missing out, over leveraging, and greed. You want to avoid these at all costs when you first switch over to a live account. Now that you are live and you've started making a little bit of money or putting some trades in with your $100 to $200 account or your $1,000 to $2,000 account, whatever denomination of money that you start with, we need to talk about scaling. Now, scaling is very important because people tend to over leverage right away. Let's say you're starting with a 1 lot as your position size, and you get your account a little bit bigger, you get it from 1,000, let's say, to 1,500. The problem I see is people want to jump to, okay, I can trade 2 lots now. So you're going to double your risk now, only growing your account by 30 to 50%. That's a recipe for failure. You need to move your lot sizes in very small increments and prove over time that the system is working on a live account for you and that your emotions are in check and that your system is working. The number one advice that I can give any trader is that start with your original amount of money. Once you double that original amount of money, pull it out and put it into a savings account or your checking account, whatever account you want to put it in, put it away so you're not trading with it. Now I want you to double that account again. So again, if you start with 1,000, you get that account to 2,000, pull the $1,000 out, keep the 1,000 in there, and do it again with the same lot size, same position size. Do that a third time, so you now have $2,000 sitting in an account that's not your trading account, and you're trading with the 1,000 again. I want you to double that again. After that third time that you've doubled it and pulled it out, you'll now have 3,000 in the savings or the checking account and 1,000 in your trading account. If you can do that 3 times, you can take all that money and put it back into your trading account. You'll now have $4,000 to trade with. That is when you've proven to yourself and to the markets that you actually know what you're doing. You're not going to over leverage. You're not going to increase size just because you fall in love with a trade or you think this is going to go great or you have a feeling, because the markets don't care about your feelings. It only cares about the analytical side of the charts and what you can identify as an A+ setup. Now, to wrap it all up, I want to talk about how you can actually start executing trades and why Henko Trade is the best. So using Henko Trade is very easy. Once you've funded your account, as you can see here, it's very easy because you have all of the tools you need on the left-hand sidebar right here, whether that's drawing arrows, whether it's indicators, whether it's measuring price range, data range, all of this is here. Very similar to TradingView. TradingView is where I do all my charting, but actually executing is where I do all my broker here called Henko Trade. So once you're live and set up on here, it's very simple to do anything you need to do. If you want to sell, you click sell. If you want to buy, you click buy. If you want to calculate your risk, you can calculate your risk and use their risk calculator, or use any of the analytics or the actual stats that they offer for you to start trading. So again, if you've liked this video, make sure you like and subscribe. Make sure you turn the notification button on, and I'll have all the links in the description of this bio to sign up for Henko Trade, or if you want to just start using TradingView and paper trading on there, or you can paper trade on Henko. Thanks for watching, guys, and I hope I helped you in your career and learning how to become a profitable trader. If you've made it through this whole video, guys, I really hope that you've learned something and I've been able to help you on your path to becoming a profitable trader. Make sure you like and subscribe to the channel, and I'll also put all the information that I mentioned in this video in the description, any links that you'll need. Hopefully I'll see you on the inside, and make sure to join Trading with Matt.